AI is not just the future, it is the present. Investors are flocking to find the companies that will fuel this massive transformation. And if chosen correctly, the right AI stock could turn a small investment into millions over the coming years. That's why today, we are diving into 3 AI stocks to buy right now that have the potential to make you rich. These are not random names thrown together for hype. These are stocks backed with solid fundamentals, visionary leadership, powerful partnerships, and the kind of Wall Street backing that gives investors confidence that these companies are here to stay. So if you are serious about making money in the stock market, make sure to watch until the very end. And remember to subscribe and turn on notifications so you never miss an update on the hottest stocks in the market. First on our list is IonQ, trading under the ticker IonQ on the New York Stock Exchange. IonQ is not just another tech company. It is building quantum computers capable of solving problems that conventional silicon-based computers simply cannot touch. Its unique trapped ion approach sets it apart in the quantum computing space and positions it as one of the most exciting AI-adjacent plays on the market. Looking at the numbers, IonQ currently trades at $65.44 per share. Financially, the company reported that it beat the top end of its revenue guidance by 15%, and after closing a $1 billion equity offering, its pro forma cash equivalents, and investments total $1.6 billion as of July 9th. That type of financial cushion gives IonQ the flexibility to invest heavily in research and development, partnerships, and acquisitions without worrying about running out of cash. Analyst sentiment is mixed, but still bullish over the long term. Based on 8 Wall Street analysts offering 12-month price targets, the average comes in at $61.50 with a high forecast of $80 and a low forecast of $32. This average target represents a slight downside of around 6% from its current price. But remember, analysts often underestimate disruptive technology companies because their models don't fully account for exponential growth. With IonQ's unique position in the quantum race, its potential over the next decade could far surpass these cautious projections. The bottom line, IonQ isn't a stock for traders looking for quick flips. It is for long-term investors who want exposure to the future of quantum and AI convergence. Now let's talk about the second stock on our list, Oklo, which trades under the ticker OKLO on the New York Stock Exchange. While it may not sound like a traditional AI stock at first glance, Oklo is developing compact, fast nuclear reactors that could become absolutely essential to the AI revolution. Here's why. Artificial intelligence consumes staggering amounts of electricity. A single ChatGPT query uses about 10 times the electricity of a standard Google search. With AI clusters projected to double global electricity demand by 2030, energy supply is shaping up to be the single biggest bottleneck to scaling artificial intelligence. From a financial perspective, Oklo is still in its development stage, which means the company is not profitable yet. For most recent quarter, it reported an operating loss of $28 million, including $11.4 million in non-cash stock-based compensation. Its loss before income taxes stood at $24.3 million, and year-to-date cash used in operating activities was $30.7 million. But the good news is that Oklo ended the quarter with $683 million in cash and marketable securities, giving it a strong balance sheet to continue its research, development, and eventual commercialization. The stock currently trades at $95.29 per share. Wall Street analysts have given Oklo 11 different price targets in the last 3 months. The average comes in at $72.50, with a high forecast of $92 and a low forecast of just $14. This average target represents a 24% downside from the current price, but again, context matters. Oklo's commercial rollout isn't expected until late 2027, making this a long-term bet. That said, in a world where AI could soon be limited not by algorithms, but by electricity, Oklo is uniquely positioned as a high-risk, high-reward play on the intersection of nuclear energy and artificial intelligence. For investors who can stomach volatility and have the patience to wait, Oklo could end up being one of the most critical infrastructure providers for the AI era. Finally, last on our list is Oracle, trading under ticker Oracle on the New York Stock Exchange. Unlike the first 2 companies, which are pushing the boundaries of quantum computing and nuclear energy, Oracle is already a giant in enterprise technology and has quickly become an AI infrastructure heavyweight. Its transformation has been nothing short of remarkable, and the numbers prove it. Oracle's remaining performance obligations, essentially its booked backlog, soared to $455 billion in the most recent quarter. That represents a massive 359% year-over-year increase. Looking deeper at financials, Oracle reported second quarter GAAP earnings per share of $1.10, which was up 24% year-over-year. Non-GAAP earnings per share came in at $1.47, up 10%. Total revenue for the quarter was $14.1 billion, representing a 9% increase in both USD and constant currency. Cloud revenue, which is the lifeblood of Oracle's growth story, hit $5.9 billion, up 24%. Within that, infrastructure as a service revenue was $2.4 billion, up an impressive 52%, while software as a service revenue was $3.5 billion, up 10%. Oracle's Fusion Cloud ERP revenue was $0.9 billion, up 18%, and NetSuite Cloud ERP revenue was also $0.9 billion, up 20%. The stock currently trades at $301.41 per share, and Wall Street analysts are bullish. Based on 32 analyst ratings over the past 3 months, the average 12-month price target sits at $340.75, with a high forecast of $410 and a low forecast of $195. That average price target implies an 11% upside from current levels. While Oracle may not have the same high-risk, high-reward profile as IonQ or Oklo, it offers something different: scale, stability, and the ability to generate billions in profit while riding the AI wave. For investors who want exposure to AI, but with less volatility, Oracle represents one of the safest bets in the sector. Well, that concludes our list of 3 AI stocks to buy right now. We covered IonQ, the quantum pioneer that could redefine computing; Oklo, the nuclear innovator preparing to solve AI's energy problem; and Oracle, the enterprise giant transforming itself into an AI infrastructure leader. Each of these companies offers a different angle on the AI revolution, from high-risk moonshots to stable blue-chip growth. Whether you're a cautious investor looking for solid returns or a risk-taker aiming for life-changing gains, these stocks give you a chance to get in on one of the most transformative trends of our time. If you enjoy this breakdown, don't forget to subscribe, hit the like button, and turn on notifications so you stay ahead of the curve with the hottest stocks in the market.